So CONY dropped down today and I took advantage of that, got some more shares. And I'm also going to show you a couple sold calls that I did on one stock that I do own and how I'm setting myself up to sell another call on another stock purchase that I made today. Hello, my friends, this is Legend. So today I ended up buying some shares and I bought some shares of CONY. And as you can see, CONY is down and I took advantage of that. I ended up getting those shares at $23.36. So that's going to help to lower that price of my real price per share. And why did I look to buy some shares? Well, one of the indicators that I look for is this RSI2 right here. And as you can see, that RSI2, when I hover over it, it's sitting at 1.3. Woo, wow, this thing is down. And it actually got as low as 23.29, okay? I ended up getting my shares at $23.36. So I purchased 100 more shares of CONY, and that's definitely going to help to lower my real price per share. And let's just take a look at that spreadsheet and I can show you what it's going to change to by using my real price per share calculator. All right, so here we are looking at my spreadsheet, and don't worry, we'll go back and I'll take a look at those other ones that I did purchase. But I wanted to go ahead and show you what I did on CONY. So as you can see, currently my real price per share on CONY is $35.11. Now remember, I purchased shares at $23.36, okay? So that's definitely under my real price per share. And before I purchased those, I went ahead and used my calculator here just to find out what that would actually change my real price per share to. Because currently it's at $35.11, and buying them under this price will help lower that real price per share. And it's also going to help reduce the number of distributions that I would need before I get this one paid off. As you can see, currently at the $35.11, I need 75 more distributions at the current average distribution that CONY has paid out in the last 4 distributions. And that's how I generate that average. And if we look at the individual sheet, we'll see what that average is. So I hover over this, go straight to that sheet, and you can see right here at the top, 75 more distributions, as long as those distributions are at 47 cents or higher. If they are lower than 47 cents, then of course that will adjust the number of distributions it would take to get my position here paid off. But in the same sense, if it is higher than 47 cents, it would take less distributions. So this here is just a glimpse into the future, but it's not guaranteed, okay? Because it is forever moving. We were getting 56, 44, 53, and this last week we earned 34 cents, but we're about to earn another distribution this week, and we'll find out what that is later this week. But as you can see, currently it's going to take me about 75 more distributions at the average of 47 cents to get CONY paid off at my current position. But by buying more shares under this real price per share here, that's going to help lower the number of distributions I would need, because that purchase is actually going to help reduce my real price per share, which is only going to benefit me. So let's go back to the summary page where the calculator is, and let's just take a glimpse into the future of what that real price per share will be. So we hover right over back to summary, click it, and here we are back to the summary page. And that calculator is right here on top, right there. And this sheet is available to my Discord members. And if you'd like to get a copy of it, come on over, join the Discord. That link is in the pinned comments in the descriptions below, where you can track all of your own high yield ETFs, find out where you currently sit in your real price per share here. And because my real price per share here for CONY is red, that means that it is above the current market price of CONY. And therefore, if I do purchase shares, it will lower that real price per share. And of course, depends on how many shares I buy at whatever price it is, that average will change according to those figures. But to use the calculator up here, this will adjust, depends on which high yield ETFs that you have entered in. It will automatically adjust and select so that whenever you do the drop down right here, it'll show the ones you have. So for me, I'm going to use CONY. So I'll select CONY. And remember that purchase price that I bought those at was at $23.36. So let's enter in 23.36. And how many shares did I purchase? So let's enter in that 100 shares right here. Now, when I hit enter, it's going to calculate how much that would actually cost, but it will also create your new real price per share right here in this field. Now, this does not update any of your current ETFs that you would have. This is just a glimpse in the future. So you can actually see if I did purchase shares at a certain price, what would it actually make my real price per share to be? And it helps you to make a decision, is that worth it to you or not? So I have 100 shares and I did make this purchase. So this one is a done deal, but what does that change my real price per share to? It was $35.11 and now it's going to go to $31.13. That's a nice drop from that 35 down to 31. That's an 11% drop in my real price per share. That's not too bad. Dropping it down to 31 and the current price being 23 put me that much closer to that market price and less room that CONY has to move up before I can flip this one to green. And of course, each distribution only lowers my real price per share even more. So therefore, I am always lowering my real price per share no matter what the market price of CONY is doing. So remember that was 75 more distributions at that average 47 cents per share for that distribution. With this purchase, what would it change that number of distributions to? Well, currently it's at 75, right? Because I have not actually entered that value into this individual sheet for CONY, so it will not do the calculations. This calculator is for you just to view, see what it would be, and then help you to make a decision if it's worth it to you or not. But just for fun, let's quickly enter that in just to see. I won't keep that information in there. I'll wait to update it on the weekend, but I'm now just curious what it's going to drop that number of distributions down to. So let's go back to that individual sheet for CONY by hovering over CONY here, and that's the ticker symbol. Click the little pop-up and it takes us right back to here. So if we do enter in that purchase right here, and like I said, I will erase this. I will not keep it in here as I do not want to update it until the weekend. But just to find out what this 75 shares up here is going to change to, I'm just kind of curious. So we'll put in a date here, even though it doesn't matter, 5/27. I did purchase those, remember, at 23.36, and I purchased 100 shares. Now, you're going to see this real price per share change, and it will adjust down to that same value that we just saw. But the one I'm looking for is this 75 distributions up here. And keep in mind, this is utilizing that average of 47 cents from the last 4 distributions for that average. But that 75 distributions off of this 100 shares is going to adjust and change to 67 distributions. Now, if this does increase, then this will decrease. If the distributions decrease, then of course the number of distributions will increase. They are related to each other, so when one increases, the other decreases, and vice versa. But I just wanted to see what that's going to be. So that dropped down 8 weeks just off of that purchase. That dropped that number of distributions down 8 weeks. Not too bad. And it dropped my real price per share down to $31.13. Very nice. And you can see that my loss here, if I did sell out of CONY, it's at currently a minus 18.7% or minus $2,300. And if I take those shares back out, let's see what that actually changes to. When I remove it, it's going to take it back to what it was before. And you can see it's actually 23%, but that loss is only 2304 versus 2311 of what we were showing before. So the loss part is only a few bucks, even after purchasing 100 shares at $23.36. So that's not too shabby at all. But again, I'm going to erase this because I do not want to carry it over. I will update this along with the distributions this weekend. But to get back to that summary page, we just hover over, click summary, and we're right back. But this calculator here is a nice little feature. And like I said, you can enter in whatever values, number of shares you want to buy, and whichever ETF you want to actually pick from. And these are looking at the cells that you have across here. And these are the ones that you're actually owning. So you'll enter in your own into the individual sheets, and those will populate the summary page. And then of course, the drop down will populate so that you can easily select which one you want to look at for the calculator. So again, if you'd like to get a copy of this spreadsheet, come on over, join the Discord. That link is in the pinned comments and in the description below. Now back to the Webull chart here. We've talked about CONY and why I made that purchase and what indicator, being that RSI2, that I look at to help me decide when to make that purchase. Then I use my real price per share calculator to help me determine how many shares I want and what that ending real price per share would be. A nice little feature. And again, it's all on that one page, so it's nice and easy and summarized for you to quickly look to see where you stand. And if you want to make any changes, you can quickly evaluate where you sit for each of your high yield ETFs and make that decision on your own. Now, HOOY, as you saw, I'm also down on HOOY. And when I went to look at HOOY, you can see it actually was moving up. The RSI2 is sitting at 77.7, so that one did not meet the criteria for purchasing shares of HOOY. So for HOOY, I did pass on HOOY. Now another one that I actually had shares of is Redwire or RDW. Now this one is not a high yield ETF, but I did have 200 shares of RDW and I had them at an average of just under $11 per share. So when it started shooting up here, I took a look at it today and I went ahead and I sold a call, and I sold 2 calls to be exact. I have 200 shares. I went ahead and sold 2 calls. Now, what did I sell those calls at? And if we look at my order form right here, you can see I sold 1 contract at $32 and I sold a second one at $33. Now the 32 expires June the 12th and the 33 expires June the 18th. Now with an average of about $11 per share, that would be a very nice payday if those shares do get taken away. And if we slide right over, you can see how much I actually earned for premium for selling those options. So for the $32 one, I made $1.40 per share for 100 shares. So that's 140 bucks on the $32 call. And for the $33 call, I sold it and made $165 or $1.65 per share times 100 shares. So not too shabby on that. So that's just over $300 in premium for selling 2 calls that I already own the shares of. And if they're taken away, I'm going to earn some very nice price appreciation. Since my average is around $11, a $32 and a $33 sale for RDW sure would be nice in my pocket. Now that is out until about roughly mid-June. But even if it doesn't get there, I still already pocketed about $300 for RDW. So not too shabby, right? That's a nice little payday for today. Now, the other one that I did end up buying is Walmart. Now, I do like Walmart, and if we take a look at the moving averages on Walmart, you can see that we are currently down. So let me turn the Bollinger Band off, and let's turn on that moving average. And let's move this out to a 1-year chart. All right, there we are looking at a 1-year chart, and you can see normally this thing stays right above that 200 MA. And that 200 MA meaning moving average, is this red line. And it's been staying above it for the whole year, right? And we can look right over here, and it's currently sitting right there on the MA 150. It did drop down just slightly below it, and I'll zoom in here, but it is still above that MA 200. It is down pretty good, and I bought this one, and I got 100 shares of it because I'm hoping to see this one bounce and start moving back up. Now, I can play this one two ways. I can either use the RSI2 method that I have done a few videos on before and actually set that sell point for that MA5. Or I can actually sell a call on Walmart. Now that I own 100 shares, and I own those shares at 118.86, as you can see right here, anything I sell above this 118.86 would be profit. And I would also earn that premium for doing so. And if we were just to take a look at the options chain, just to see what they're selling for, we can get a little bit of an idea. So we'll just go to the options chain right here. And if I went out, say 1 month, so 30 days right here, that's the time frame. So we'll just open this one up, and that's June the 26th. And I open that up, and this side is the call side, and this side is the put side. And since I own shares and I'm looking to sell a call, that means I am agreeing to sell my shares at the given strike price that I select. And for doing so, I would earn a premium. And these values here are those premiums. Now this number here in the middle here, you can see that this is what the closing price was, okay? So during market hours, this value or this black line will be the actual value of that stock. Now you cannot sell or buy options after hours. You can only do it during market hours. So I cannot sell that call at the current time. But come tomorrow, if we have a green day, which it looks like it's already starting to move up a little bit, but again, this is after hours. Things change by the time market opens. But it sure would be nice if we have a huge pop up by the morning. That would just tickle me pink. But just to get the idea of what we can actually sell this call for, if I own these shares at 118.86, anything above it will be profit if they're called away. So therefore, I would want to look for a strike that is above 118.86. And in this case, all of these strikes are above 118.86. I could even do a pretty much at the money call right here, 119. And that one there would give me roughly $3.28 per share, or $328 to sell it at 119. That's good money. And that is cash in my pocket as soon as it does get filled. I do not have to wait for that. That shows up in my account immediately as soon as that option would fill. But since Walmart is down so much, I'm hoping that it's going to pop up. And I definitely would like to wait until Walmart is having a green day, okay? If it's having a green day, then I would want to sell that call. Just for this example though, let's just have fun and take a look at what we can actually find on the options chain here. And if I want to slide over here just to show my deltas here, and that delta is just the possible percentage that I would have of possibly winning or losing that trade. Now, take that with a grain of salt because that does move and change depending on that price of the stock. So don't think that if you pick a low delta here and you pick a 14 delta here, that's saying that you have 14% chance of it going south on you, right? Or you losing it, or an 86% chance of it expiring worthless is not guaranteed, okay? Do not think that the delta is the indicator that's going to save you, okay? Because it can go against you real quick, and all of a sudden, when that price moves up close to that strike, you'll start seeing that delta is now closer to 50 or 40%, right? So that will move. But for this example, what would I actually select for that strike? And for me, I like to make somewhere close to about 3% per month, okay? Now, if I make more, great. And some of these stocks have a lower IV, so therefore you don't make as much in premium, so therefore it makes it a little bit more difficult to get that 3% projected for the month. But in this case, if I were to select, say, a 123 strike, we have the bid ask right here of 157 to 174. And on Weeple, they do show what that midpoint is. And that's usually the one that I usually try to go for, okay? And it shows that midpoint right here of $1.66. So we'll just use that as the example. So $1.66, if we enter that in as what we would actually make, and then we divide that by how much we actually have invested. And this is per share, right? $1.66 per share. And how much did I pay per share for Walmart? Well, that was $118.86. So we take the 166, divide it by 118.86, and that's going to give us 0.01. And if you took that times 100, that's 1.3 or 1.4% for just that position. And since this is a 30-day strike, that is about what we're looking at making if we did a 123 strike. Now, if 1.4% is good for a month for you, then you can go for that. But let's take a look to see what would it be if we dropped it down to 122. So a 122 strike will pay an average premium of about $2.01. So we'll enter in 2.01, divide that by that same 118.86 that we actually have invested, and let's see what we would actually earn on our money. Now we're at roughly 1.7%. And for something like Walmart, that's actually not too bad, right? Because I can see this one continue to moving on up. And now you can play with the expiration date. You can reduce it, you can increase it, you can get closer to the actual market price, which would actually pay you more out in premium. Or if you want to be safer, you can go further out, take less premium, if you can see this one popping up and you don't want to necessarily get your shares taken away. Now, if they are taken away, I have no problem about my shares getting taken away. But I definitely want to get paid for that, right? And let's just say we look at one more here just for this example. And if we look at the 121 strike, it would pay on average 2.37. So let's enter in 2.37, divide that by how much we actually have invested per share, and that's 118.86, and that's going to give us 0.0199 times 100, and that's going to be roughly 2% for 1 month. Now that is something I can get behind, especially on something like Walmart. Because if it did pop right back up to that 121, I'm going to make 2% in just the premium. But at that 121, I own them just below 119. So just to keep round numbers, 121 minus 119 is another $200. So not only will I make $237 for selling that call, but if those shares are taken away, I'm going to make $200 in price appreciation. So all in all, for that trade for the month, if those shares were taken away, I would make $450, right? Because if we take that 121 minus 118.86, that's going to give us $2.14 plus the $2.37 in premium. So the 214 is price appreciation and the 237 is premium. Gives us a total earned of $4.51 divided by how much did we actually have invested, and that was that 118.86. And that would mean in the month, if those shares are taken away, we would make on our money 3.8% on our money, because this is a percentage. If I take that times 100, you can see 3.8% on our money. Now that is pretty good money, and that's not even on a green day. We would want this one to move on a green day before we actually try to sell that call. That should increase those premiums, and if we have a bump up overnight, then we can actually even maybe sell a higher strike and still earn some good premium. So some exciting times. I made some exciting moves today. Super excited, right? Love it when I'm able to make some moves. But looking at the chart right here, if I were to draw a support line here, right there at the bottom of this one, and that's where it's currently setting at. And we look right over here, it tapped that line right here, and it was teetering back and forth on that line, even back here. So this line here at roughly this 117.92, and I purchased my shares at 118.86, could be a good support line. Not guaranteed, but I would love to see that hold and use this line right here as a support line, bounce this thing back up, get back up to 130 quick, and then I could sell a call. That would be awesome. But of course, if I do sell my call at roughly that 121, 122, or 123 or something like that, and this thing flies past it, then yes, my shares could get called away. And yes, I could be leaving money on the table. And at that point, I would have to decide, do I roll my option up in strike and out in expiration? Or do I just let those shares go, take that price appreciation, and move on to the next one? And that is a decision that each person has to make. But until it got closer, I wouldn't even be worrying about it. So currently I do have 100 shares of Walmart, and I'm hoping to see that one bounce right off of this support line and start moving back up so I can sell my call, earn that nice premium. And if it did have a pullback, I might actually be able to buy that back to close it out, let it come back down to this line, bounce off of it, and start moving back up and sell another call and keep it all within that same expiration date. That's very possible. You can go in and out of these and not even change the expiration date, continue to earn that premium, and if they are called away, you still are going to make that same price appreciation or more, depending on what that strike is you selected. So that was a lot to go over today, but I wanted to go over just some of my thoughts, what I'm doing, how I'm thinking about these, and how I'm setting myself up to actually sell a call for this example, even in Walmart. But I will update my high yield stock tracker sheet this weekend, enter in those purchases and distributions, and we will be able to adjust that real price per share and find out what it is at that time. So I think I'm going to wrap it up right there. If you don't mind, hit that subscribe button and smash the like button, as it would be much appreciated. And as always, I am not a financial advisor. This is not financial advice. Please do your own due diligence before you get into any stock plays. And until next time, Legend out.